How important is it for you to work with a loan officer who's honest and ethical and who will give you the best options for you and your family as opposed to looking at the options that will get them paid the most amount of money? Well, I know someone just like that, and he's on our program today, and he'll be sharing a couple of new programs that can have a great impact on your life if you are a first-time buyer or if you are looking to purchase a property that has an ADU. Alrighty then, we're back. This is Daryl Williams here with Armando Gonzalez, who is an outstanding loan officer here in the Los Angeles area. He gave me a call and talked to me about a couple of programs that I'm excited to talk to you guys about. And one has to do with the brand new program by Fannie Mae. It has to do with we could now purchase 4 units with only 5% down. Give us some detail and some of the exciting information about that, Armando.
Absolutely. Daryl, thank you so much for having me back on your show. So first of all, let me just share with you. Currently, to purchase 3 and 4 units, you would need at least 25% down. So now, let's just put that into the reality of things. Let's just say the units are worth $800,000. That means that you would have to have $200,000 out of pocket just to purchase them. So a lot of people stay away from units for that reason. However, starting November 18th, Fannie Mae has made it possible for owner-occupied to purchase up to 4 units with as little as 5%. In that example of $800,000 sales price, you're speaking about $40,000 versus $200,000. So this is going to be a game changer for a lot of homeowners. So now, you get to use a portion of that income from the other units for qualifying purposes, and of course you get to use it for helping yourself make the payments. So this is going to be a game changer. In my opinion, a lot of people should really take advantage of that. Now, if you're a professional, a realtor, and you understand how this all works, you will also know that FHA has the ability to do it with as little as 3.5%. So you may be thinking to yourself, what is the big difference? Well, let me tell you. What happens is FHA requires the property to self-serve, which means that you have to take 75% of the rents on the property, and that has to be equal or higher than the payment, which makes it difficult these days for that to be possible. Now, Fannie Mae does not have that guideline, so it'll be a game changer. I would suggest anybody who's interested in purchasing units to go ahead and take advantage. Of course, it's conventional financing. You will have to occupy at least one of the units for at least 1 year's time. You don't have to commit to living in the units forever. However, the intention at the time of the purchase has to be to owner-occupy. You have to occupy it as your primary.
Absolutely. Okay. Now, is there mortgage insurance with
Absolutely.
This particular loan? There is.
Absolutely. Yeah, anytime you're going in with less than 20% down, you're going to have mortgage insurance. Now, in the olden days, mortgage insurance was a lot more expensive than it is now. If you're dealing with a borrower that has nice high FICOs, and by that I mean 740 and above, your mortgage insurance isn't going to be that expensive these days. Much lower than FHA for sure. So essentially now you're comparing your financing, the FHA versus the conventional. By far the conventional is going to be a much better option. Because remember, FHA charges the upfront MI, and then it charges the monthly. Another thing is, FHA, the MI stays on the loan until you refinance, until you pay it off. Whereas on the conventional, after you can demonstrate that you have enough equity on the place, and after at least 24 payments, you can apply to have it removed. So definitely, by all means, the conventional option is going to be a much better one. The only time that you probably would want to consider the FHA is if you're dealing with a borrower that has lower FICOs. So in that scenario, you may have to consider FHA. But in all honesty, this option of that conventional, it's a much better option, in my opinion.
Okay.
Starting November 18th, it's going to be available for everybody. Let's take advantage of it. Help some folks get into homes.
Yes, I'm
Absolutely.
excited.
That's really what it's all about. And it's going to help a lot of families. I'm confident of that.
Now, how many families, is there a limit to the number of families? Since you could purchase 4 units and it's 5% down, can 2 families get together? 3
Absolutely.
families?
Yeah, by all means, definitely. There's no reason to not do that. You can. Now, if you're already using the rent from the other units, then it would not be necessary.
Right, I got you.
But now,
so let's say if it's vacant. Let's say you got
no, even
4
if it's
units.
vacant, the appraiser will give us a rent survey that will say what it could potentially rent for, and we'll go ahead and use 75% of that. That's how it goes for conventional. In some cases, you're better off with the units being vacant,
Excellent.
because now we'll go with market rent, whereas sometimes you'll find units that have tenants that have been there for a long time, and their rent is nice and low. Well, that may or may not be helpful for the new buyer,
Okay.
because you want to collect as much rent as possible.
So this will go into effect
November
November the
18th.
18th.
Yes, sir.
2023.
Yeah, correct. Yeah,
Okay.
just about a week and a half ago, away from now.
So people will be able to contact you that are interested in this program, and I'll make sure they get your contact information.
Absolutely, and there's no reason for us to wait until it comes out. We can get you already pre-approved and ready to go. That
Good.
way, the minute it becomes available, we can have you, jump right in, take advantage. Yes.
Okay, now the other program you got me real excited about has to do with FHA now allowing the income from the ADU to assist in qualifying. Is that right? Tell us about that.
Yes, sir. That's a brand new change. FHA just released they have a way of communicating with the world. They call them mortgagee letters. And the latest one regarding this subject, they came out and said, we will now utilize the rent from the ADU for qualifying purposes. This is great news because we have been able to do FHA financing on properties with ADUs. However, the rent wasn't being calculated. So for sure, this is a game changer as far as FHA with an ADU. Now, some people are even talking about going 203K under the FHA because 203K in itself is nothing really. It's just a version of FHA. So FHA has 203B, 203K, 203. They have different. So the 203K option under FHA will allow you to actually build additions to your homes.
Okay, no, let me stop you. 203K will allow a borrower now to literally build an ADU in the backyard if it's big enough and it meets the requirements of the house.
Absolutely. So now if you have a family who wants to buy a duplex but really cannot come up with or cannot see themselves paying the price for an actual duplex, now they'll be able to buy a home that has a large enough yard to be able to build an ADU there. And they get to finance the money that it costs to build the ADU. So at the time of the purchase, of course, this is the full 203K, which means we're going to have to get a contractor involved, and we're going to have to get, the estimate and all that stuff that goes along with it.
Okay.
But guess what? You get to have 6 months to build it after the close.
Okay.
So the way it works is the lender goes ahead, the appraiser does the appraisal as though the unit, the ADU was already built. So when closing, we'll know more or less what rent that place is going to generate, even though it doesn't exist yet.
Right.
But the appraiser will give us a rent survey as to what a unit of that size in that location will generate, and also the value of it will be incorporated onto the transaction. So here's the thing. We get to close.
Right.
The way the 203K works is that the lender holds the funds, and as the work is done, as it progresses, the monies are released. So the borrowers finish 1/4 of the work, they can apply for a 1/4 of the money to be released to them in the contractor, and so on and so forth. Once they're done, we close it out. Now you have your single family and your ADU, and of course you get to rent it and make some money out of there.
And with that 203K program, the contractor that does it, I'm sure he has to go to the city and get permits and have inspections and so on and so forth. So
Of course.
you literally have a fully permitted legal structure that your mother could live in, or one of your kids.
Or your tenant, you can make
Or
some
your
money.
tenant.
Or one of your kids, yeah. Okay, Daryl, just to touch bases in regards to our previous conversation. So, co-signers are allowed. Both FHA and conventional allow for co-signers. So I know sometimes we need one, and perfectly acceptable. So let's keep that in mind. Don't let you thinking, oh, perhaps I'm not well qualified, but I could get a co-signer. Definitely. If you can, we can move forward with it.
Okay, so who is eligible for these programs? Is there any kind of special qualification, or is it standard for the FHA one where you'll be able to use the ADU income, and for that Fannie Mae program that's going to become available on November the 18th, 2023? Who's eligible for those programs?
So FHA and Fannie Mae, they each have their own guidelines, right? So as long as you meet the criteria, credit, employment, so on and so forth, as you know, they like you to have been working for at least 2 full years, and the
Okay.
FICO score, it varies depending on, the program that you're doing. But as long as you meet the general criteria, these programs do not have additional layers of qualifications or requirements. As long as you meet their, original FHA or Fannie Mae, you're good. So there's no additional, you don't even have to be a first-time home buyer. You do have to occupy it as your primary residence. That is something that both FHA and 5% conventional loans do require, that you occupy as your primary. That's for
Right,
sure.
right.
That goes without saying. But having said that, there's no additional guidelines.
What question have not asked you that you believe people should know about, because it's something that will benefit them if they're thinking about buying a house? Any other useful information that they could use?
Yeah, so I want to just remind people, everybody, that when you buy a home, statistically, homes go up in value anywhere between 5 and 8%. So let's just be conservative and say that we're going up in value at least 4 to 5% for the next 10 years. So here's how you want to look at this. Let's just say you invest 5%, and then let's just say that the property goes up 5% in 1 year's time. So you have already made up your investment. And then if it goes up 5% consecutive for the next 10 years, you will be having 50% worth of equity in your home in the next 10 years. There's no way to guarantee that. Having said that, history has shown us, even during bad times, statistically speaking, the average goes between 5 to 8 to 9%, and in some cases even higher. Sure,
Okay.
there are periods in time in which it comes down some, but if you don't have to sell quickly, you will benefit. So you just always want to think about this as a sacrifice. You're obviously having to come up with the money up front, and you may have to be sacrificing a little bit to make the monthly payment, but just think about it like a forced savings. There is hardly any other investment that I can think of that in the long run will be this beneficial. And I just always have the need to remind people that this is something everybody should really consider doing, because while it may seem like a little bit of a sacrifice, it's well worth it. Most people who keep their property long term benefit from it, Daryl. So I would encourage anybody and everybody that feels that could potentially do this and make the payments to explore it. It's worth looking at it. It's worth talking about it. And if you want to just give me a call, we can sit down, talk about it, so you can explore your options, so you can know what's available to you. And that's really what we're all about.
Okay. Go ahead and look in the camera and let them know where to reach out to you and where they could reach.
Yes, absolutely. So very simple to remember me, Armando Gonzalez, 562-756-1477. And if you wish to email me, Armando Loans, ARMANDO LOANS @hotmail.com, Armando Loans. Just remember that. My first name, Loans, because that's what I do, @hotmail.com. Thank you.
All right, Armando, thank you so much. And periodically, we're going to invite you back to talk to our audience because we learn a lot from you here.
Thank you for having me. I really appreciate the opportunity, and I'm always ready to come here and talk to you guys.